Hello, everybody. This is a weekend review. So we're reviewing Friday's trade based on the two-step model. So right here, you can see my Friday's trade. I actually broke even on this trade. So didn't actually make any money on this one. So let's just review it and see what went wrong or right, etc. So this is ES. It's the 5 minutes. So the model is the same every single day. So let's just um, first, let's just go back. So what I'm going to do is just grab this arrow. So I still have my all my setup right here. We are on the 5 minutes. So the first thing we always look for is direction. So that's 9:30 right here. As you can see, we didn't really have any real direction really until what time was this? This was 10 o'clock. So we didn't really have a direction, right? There wasn't any established swing low or established swing high. Then at 10, we had this move. Now, I prefer, and you hear me say this all the time, I like to have more than two candles on the 5 minutes to kind of establish some kind of movement. It's not compulsory, but I like to see that as a preference. We only had two. It was Friday, so it was a little bit of a tricky trade, I guess. We had this swing low here. So swing low, 5 minutes. And then we had this swing high that was formed. Now, it's technically one and two candles. You have this one candle, two, and three. We have a swing high. So at this point, we have direction, which is the first thing we look for in the model. Once we have direction, the next step is we want a retracement into a fair value gap. This is what we have right here. So we get this retracement into this fair value gap right here, 5 minutes. It's always going to be the 5 minutes fair value gap for me. You can use other fair value gaps, but for me, always 5 minutes. So my 5 minutes fair value gap is in yellow, always. If it's green, then it's 1 minute. Once we have that, we are looking for a rejection of that fair value gap. Okay, so but the first thing, the final thing is the overlap, right? So we just need a confluence. If I take my fib, you can see that overlaps with the 50. That's the model. So that's step one, step two, and step three. So once we have that, the rest just comes down to experience, right? Your entry, stop loss, and your targeting. So targeting is 100%, which was here. So this was my 100% um, from this low, okay, to this high. Projected from this low, that's 100% right there. Now I got the entry after I had seen the rejection. Now I got the entry a bit late. I was watching the 1 minute, um, but I got distracted. But you can see that there is a rejection on the 5 minutes anyway. So I got that rejection there. Stop loss was just directly below that swing low because I got it pretty late. And that was it. I just waited for the trade to go first above this high. Now, once it goes above this high, you can terminate your trade. You can terminate your trade because you're pretty much done. All I did was just adjusted my stop loss to break even. And what happens is price then goes above that high, then runs and taps into my stop loss, right? Taps into my stop loss. So because it tapped into my stop loss, I just broke even and that was it. It then price went again above the high. So it got close to your targeting. So you could have terminated here if you kept your stop loss in place. Sometimes I will keep my stop loss in place. Sometimes I'll adjust it. Again, every day, every trade is slightly different. Because we were going into a premium um, from this swing high to the swing low, I adjusted my stop loss. So I just wasn't, I didn't have real conviction because there wasn't any real trend alignment on the 30 minutes or 1 hour to really give me any confidence. So that's why I adjusted my stop loss. So as you can see, price did come down. So if I left my stop loss in place, I would still have been taken out anyway, right here. So it did come back into the fair value gap, run back up and take out this high. So it actually ran back up and went close to your target. So it was a bit of a crazy day. Now, if you had kept your stop loss below this low, then you could have taken your exit there. Now, this was unrealistic just because this was a very wide range bar. So you wouldn't have had the stop loss there. You probably would have had it here, which would have been safer just below this candle right here. So you wouldn't have been taken out and you could have still exited the trade. So every trade, the whole point of this video is to just explain that every trade is different. Where you put your stop loss will depend on sort of personal conditions. So for me, there's two primary things I'm looking at. First is confidence overall. How confident am I in the trade? And this is based on what the trend is doing and what the other time frames are doing in relation to the 5 minutes. That's really the first one. The second one really comes down to your risk. Like how much money are you willing to risk for that trade? And again, that's based on your confidence. So I've just deleted all my things by accident, but that's um, basically how I determine stop loss. So it will vary every single day. So there you have it. That's really the two-step for Friday. So just reviewing of Friday's trade. If you like the two steps or you want to see more, then of course stay tuned and I'll see you in the next video.